Hey everyone, this is a continuation of the valuation webinar we had end of July. The link to the webinar will be posted in the caption section. To start off, quarterly valuation is already old news. For many investors, the market is moving towards monthly or even daily. Here's how AI is making it possible. So maybe, Robby, let's start with technology. How do you see agentic AI and machine learning enhancing value for our clients and improving the overall efficiency of the valuation workflow?
Great place to start, Sree. I think the reality is the valuation need basically have accelerated, right? So, as we mentioned before, it used to be every 3 years, then annual, then quarterly. That was the norm today for a lot of open-ended fund. But with many retail channel, the rise of non-traded REIT, even kind of recent executive order allowing alternative into 401k, we start seeing the shift to monthly, right? So even daily valuation as well, which is what many of our non-traded REIT clients are doing today. And if the frequency keep going up, we cannot keep doing the same thing, right? So this is what thing. That's why the AI can step in, right? So now you can see, Sri, I'm no longer my jail cell, right? So I'm kind of like been liberated here, Sri. So it's kind of due to AI, maybe, right? So uh, again, back to serious conversation, right? So I think first, I think that they take away the heavy lifting, right? So the automation of rent roll ingestion, the cleansing of the market data, catching the error before they kind of go to get to the valuer, right? So and machine learning that build on top of that, right? So spotting the trend early, the benchmark performance, like predicting it's shifting is kind of faster and safer, right? So kind of free a lot of our experts to focus on what really matter, right? So researching the market, reviewing the underwriting, it can help our client with the reporting and analytics, right? So as you and I have talked many times over and over though, right? But AI is great, but one most important guiding principle, I think, in Alta is the quality of the work, right? So you have to be the same or better, right? So we will never accept the lower standard. Right, everything we do have to follow this strict kind of a privacy protocol as well. We have to anonymize sensitive data, so the trust will never compromise. But the most important thing as well, the quality still have to be there, even with the AI kind of assisting us, right? So once that foundation is in place, then we can go further, right? So then we can go further into AVM. That can kind of go to many use cases. We can do diligence, loan underwriting, check collateral value, debt coverage service. And again, you can sanity check of existing investment, whether they don't need frequent valuation as well. So there's definitely a lot of application of kind of once you set an AI as a foundation.
That's correct. And what about extracting insights from artifacts like PDF reports, rent rolls, DCF models? That has always been a big point for our clients. Any thoughts on that, Robby?
It's perfect, Sri. I think as I mentioned during the webinar, right? So a lot of cases, if the report just sit there or value just it become just static data, right? So it doesn't tell you anything, right? So, but this report, a lot of cases have a lot of, it's a data graveyard. There's a lot of pages locked away, right? So with AI, now we can unlock that one instantly, right? So turning them into analytics in a second, right? So therefore, we can help us review the valuation without even opening the model, without even opening the report, right? So and that give our client kind of like actionable insight when they need it, like not later on, it's like immediately come from there. And again, a lot of valuable in there. The question is how do we make it into something that's usable for us and for client as well.
So, what you're really saying is firms don't have to choose between speed, quality, and trust anymore. AI can give them all. Okay, thank you. So, Robby, let's shift to your favorite topic, uncertainty. Is valuation uncertainty impacting capital deployment or asset allocation? I know I'm leading the question a little bit, but would love to get your thoughts on this uncertainty overall, especially in secondary and alternative markets, and how are we helping our clients navigate that?
Definitely, Sri. Although uncertainty is my favorite topic, no investor like uncertainty, Sri. So whether it's real estate, stock, and bond, right? So it's not only real estate, any investment out there, right? So in late 2024, we kind of see a lot of positive sentiment, right? So, but then in today's and going to 2025 with today's geopolitical tension, the tariff, rate question and kind of talk about capital gain tax or recession, now you can see why investors are pausing, right? So the deal flow has slowed down, right? So that said, recently we start seeing a pickup in activity, especially in industrial and apartment lately, right? So now the question is like, how do we help our client through this, right? So I think the one answer is the data and analytics, right? So we use attribution analysis to help them to see exactly why the performance different from the benchmark like Odyssey, right? So is it because of the allocation or is it because of selection? Again, that's also one of the investors asking them all the time, right? So, and then which asset, which sector, which MSA that driving these variances, right? So once we see the driver, then they can focus their capital with much more confidence, right? So that's why we kind of build the benchmark manager into our Argus intelligence, right? So it help our clients see the valuation movement compared to the industry, right? So I think the topic that a lot of investors are asking is like, okay, your movement on value or appreciation, is it come from the cash flow effect, i.e. the changes on market rent or kind of like the cash flow portion? Or does it come from the yield effect, which is kind of basically, again, the pricing kind of like side, right? So such as the discount rate, exit cap rate, or rent assumption. And finally, is it the capex effects, the amount of capital being spent? So all of this are kind of the question that investors have been asking and people have to answer that, right? So, and for secondary market and alternative, our client give us basically a massive data set to work on with, right? So as you indicate, right? So for example, using for alternative asset type, a lot of people looking at it as SFR BTR, right? So we value over 50,000 kind of homes on quarterly basis. That's a big data coverage that we have, right? So not only that, we also have the self-storage, we have senior housing, we have student housing, name it, right? So, and all of this let us benchmark the rent, benchmark the operating statement, right? The valuation with the data is then as well, right? So um, kind of give an example of our PTR SFR team. Like, so we got our team member like Sally Johnson and Troy Sivak. They've been done great research on the SFR PTR recently, right? So, and that's kind of linking the SFR rent to NOI performance, to school rating, and various different factors. So, all that part is helping us basically provide the info to our client to make the overall decision on the day-to-day basis, right? So, again, at the end of the day, it's about transparency, exposing more data, kind of like more explanation, more comparison, then our client just don't see a static number. They can understand the story behind it and what's driving the NOI, what driving the performance, the pricing, or is it cash flow, or is it other, right? So I think that's definitely kind of the more data is the better.
So what I'm hearing is even when the data is thin, the processes, the people, the Sallys, the Troys of the world are telling the story behind the data and helping our clients get a clearer view of the risks and helping them gain confidence so that they can make the decisions appropriately. Hey everyone, this is a continuation of the valuation webinar we had end of July. There were several questions posed. This is one of the questions that came from the audience. The link to the webinar will be posted in the caption section. Fair values, clearance pricing, brokers' opinions. What happens when they don't align? Here's how top firms get it right. Let's talk about the process, Robby. How do you manage differing valuation needs? Say fair value for audit purposes versus clearance pricing or brokers' opinions of value, especially when they don't align. Help us walk through the process and your thinking here.
Sure. I think that that's a great question, right? So generally, if you can know of three, and a lot of our values for basic reporting, right? So it is more about fair value. So it is to understand what's the specific need. In our case, in our case, it's fair value, right? So which is market value, which is actually the most, it typically is the most probable price in the competitive and open market, right? So um, both appraisal have to consider all the input, right? So whether it's BOV, whether it's distress sale, financing, valuation, all of this have to be considered, right? Like, do I look at it as all the information out there, even though it might not be aligned, is still information that's useful for an appraisal to consider, right? So, but the most important thing I can look at an appraisal essentially need to think like a buyer, right? So for purpose of the market value, right? So it is most probable buyer, right? What is the buyer profile, right? So what are they reacting to? So we also have to compare the valuation completed for the financing as well. We can use it as a benchmark. Okay, if there's no data on transaction, then how is the valuation done for the financing, right? So, and I know it's not the primary data source, but also give us an idea how the lender and CMBS underwriting for select assets, right? So all of that is part of the data is being kind of used by a lot of appraisal and us as we kind of come up with the value, right? So finally, as well for Altus and our client, I think one additional kind of tool that we have is the benchmark, right? So we get the scale to benchmark a lot of valuation out there, right? So we're benchmarking this 20,000 valuation plus per quarter. That's over $1 trillion gross asset value, right? So again, the benchmark doesn't dictate the value. Individual value is the one that create the benchmark, right? So, but it is provide a sanity check, right? So, is a valuation in line with the broader market, broader valuation? Again, in the combination of the thoughtful of appraisal and then using the benchmark, a lot of cases they help us deliver the valuation and the rigor, and then also give us comfort that the valuation are well supported by the transaction, by the market, and as well by the industry.
Exactly. I think you nailed it on the head. Scaling up speed without ever cutting corners on accuracy and building client trust. I think those are the key things that you spotlighted here. Thanks, Robby.